Yeah, good evening, everyone. We welcome you all to Indian Bank's post-results conference call for the second quarter FY25, hosted by Emkay Global. From the top management, we have with us today Shri Shantilal Jain, MD and CEO, Shri Mahesh Kumar Bajaj, Executive Director, Shri Ashutosh Chaudhary, Executive Director, Shri Shiv Bajrang Singh, Executive Director, and Shri Brajesh Kumar Singh, Executive Director. I request the MD sir to first briefly summarize the key highlights from the second quarter results and also provide future direction on growth, margins and asset quality, post which we will have the Q&A session. Over to you, MD sir.
Yeah, good evening. Welcome to all analysts and investors in the post-result Concall. We have declared our result today and you might be having the investor presentations. For immediate understanding, I will talk few highlights. Our business has grown by 10% and deposit has grown by 8% and the credit has grown by 12%. Under the credit, the retail credit has grown by 15%, agriculture by 16%, MSME by 8%, but the standard MSME has grown by 12%, and the corporate 9%, and the standard corporate is 10%. So all are basically in double digit. All are in double digit, and we could maintain our CASA more than 40%. So we are at 40 plus 0.47 is again 40.56 of the last. In the beginning, we said, given the that our deposit will grow between 8 to 10%, we have grown by around 8%, and we raised infra bond of 10,000 crore, which works out to 1.5%. So 8 and 1.5, 9.5% of 10. We are there. In the credit side, we said 11 to 13%, and we have grown 12%. This is the business side, and the profitability, of course, the operating profit has grown by 10%. The net profit has grown by 36%. The profitability has grown on the back of NII growth of 8%, bad debt recovery of 44%, fee-based income of 11%, and the cross-sale income 5%, and the PSLC income more than 8%. So, as far as your question on the margin side also, our margin was 3.39 global and 3.49 domestic, is against 3.44 of the last quarter. So reduction of 5 bips. If you adjust the penal charges, it is 6 bips. Impact is 6 bips. Earlier it was 2, now it is 8. So incremental is 6. If you add 6 bips of 3.39, it is 3.45, which is more than the last quarter margin. Now come to the domestic, same story is the domestic side. Now our ROA has improved from 1.06 to 1.33 or 1.20 of the last quarter. ROE also is 21%. Cost income ratio 44-45. We had made a additional provision close to 150 crore because of the FIMDA rate has come down to 6.94, and we decided that let us make higher provisions and act based on the actual as well. Yield on in the quarter, the cost of deposit has grown by 8%. Yield on advance has also grown by the 8%. Both sides 8%. And you know, in the investment side, because the investment, yield itself is coming down. So whatever incremental investment you make, it cannot be 7.15, and the rate itself is a 6.86, and so there will be an impact of that also. As far as asset quality is concerned, it has come down from 3.77 to 3.48%. The net NPA has come down 0.39 to 0.27, and the provision coverage ratio increased from 96.6 to 97.7%. Our story for recovery more than slippage is continuing. Last time 2,000 odd crore we have recovered, and the slippage was 1,357 crore. And you see last quarter also, last year also, prior to that also, our recovery was more than our slippage. As a result, our gross and net NPA is coming down. And our collection efficiency is 95%. We are maintaining that collection efficiency. So point is that whatever is due, some overdue is there, we are recovering that overdue also and maintaining this. Capital adequacy ratio is 16.55, and if we add up half yearly profit of 5,110 crore, it is 17.84. 17.84 is against 16.55, virtually is against 11.50 of regulatory. Right? Now this SMA book has slightly increased from by 2,400 crore, 2,300 crore SMA, and which is because of the one account of 2,200 crore, which was appearing in SMA 2 as on 30th September, has now come down to SMA 1, but the part of the irregularity has been paid by the customer. It is a government guaranteed account. As far as the digitization is concerned, our today 91-92% of the transactions are happening on a digital basis. So regarding all or other grant, we are given a guidance of recovery of 7,000 crore. We are 3,958 crores. We have said the AUC recovery will be 2,000. For a full year, we are at 1,200 crore. NIM, we are given 3.40. We are at 3.39. Domestic, rather 3.40. We are at 3.49. ROA, we said that around 1.20. Now we are at 1.33. ROE, we said 19-20%. We are at 21%. So credit cost has also come down, and it is 0.65%. Slippage ratio also has come down to 1.06%. Lot of things we are doing for digitization. Lot of things we are doing for HR side. So I request my colleague Bajajis to tell you about the digitization what we are doing. And then we are open to question. And you raise about 2-3 points. Let me reply this also. Growth, we will continue to have our same the guidance which we have given. Margin side also, our endeavor is always to stick to our guidance and rather give better than the guidance of 3.40, which we said we will continue that also. And asset quality, of course, then the collection efficiency is 95%. And the SMA 2 number barring this one account is same. 10-20 crore here and there, not much. So asset quality also will be going probably better. You know, Bajaj, please.
Thank you, sir. Good evening, friends from the analysts and the investors. We have already placed this presentation on digital transformation, digital migration. I'll just touch a couple of points, then we'll take questions. The migration from branch channel to digital channel have gone up from 89 to 92% and YOY 3% plus. Apart from that, we have come up with the new omni-channel app. Here the mobile banking users have gone up by 20%, which is 1 crore 51 lakh to 1 crore 81 lakh. Same way, transactions also have gone up by 10%. UPI users have gone up from 1.5 crore to 1.95 crore, which is YOY 27% plus, and remitter transaction also 62% YOY. Even if we talk about the daily UPI transaction, now the daily UPI transactions are 2.28 crore, which is remitter 1.55 crore and beneficiary 0.73 crore. Apart from that, the net banking user also have gone up from 98 lakh to 1.11 crore. And the credit card user also gone up by 50% from 1.77 lakh to 2.65 lakhs. Same way, the FASTag user also have gone up by 37%, and POS also have gone up by 56%. We are continuing our digital initiatives, the journeys which we started in the June 22. This half year we have completed 24 journeys and we are prioritized 56 journeys. Q1 6, Q2 18, and Q3 13 and Q4 19 journeys we have planned. Last year we did digital business of 81,250 crore, and last half year it was 29,116 crore. This half year it is 79,059, which is 172% YOY plus. Same way in RAM, 24,000 to 63,000, which is 162% growth. And e-deposit on the liability side also, it was 4,911, now it is 15,000, which is 206%. Apart from this assets and liability, we have taken certain other initiatives, which is like EBG, EOTS, death claims. So there also there is an improvement, 0.3 to 537 crore. And even adoption also has gone up. MSME it is 77, retail 73, and agri 91%. And even the last time also the question was asked how much we are spending on the IT. So it remains almost same. Of the OPEX, it is 10%, and NINS, if you say, it is 27%. Apart from this, we already on the capital expenditure 135 crore for this half year we have done, and we are committed to almost 400 to 450, 500 crore rupees of capital expenditure apart from this revenue expenses. So we'll take question at the end during the call. So these were the few initiatives we have taken by us.
Now we are open for question answer.
Yeah, thank you, sir. We will now open up the floor for Q&A session. Anybody who wishes to ask a question, please raise your hands. I request the participants to limit your questions to 2 per participants, and for further questions, please join back the queue. We can take up the question. First question we'll take up from Ashok Ajmerari. Ashok, please unmute yourself.
Hello, good evening, sir. And
Good evening.
before my time gets over, sir, let me first of all wish you a very, very happy Diwali to everyone, to the you and all the people there, the analyst fraternity as well as the people in the Indian Bank. And sir, compliments to you, sir, for good set of numbers, especially on the profitability front, good profitability, and all the most of the parameters of the profit, the expenses, the asset quality. The gross NPA has also come down substantially. The net NPA is now 0.27%. But having said that, sir, if I look at the business growth, both the deposit and the credit, sir, though on an annualized basis, if the tracking 4 quarter, if you are taking, then it's okay, 10, 12%, 11%. But if you look at the current FY25 half year, our business growth is hardly 1.79%. Our deposit growth is only 0.75%, and our credit growth is only 3.16%. So, having said that, if we look at the entire FY25, even based on your target also, sir, you need to raise the deposit of almost about 70,000 crore in the remaining 5-6 months. You need to disperse the credit of almost 52,000 crore. So, for that, sir, what is the roadmap ahead? I mean, what are the plans? What is the sanctioned pipeline and the proposal which are already in a sanctioning stage or disbursement stage? And how do we basically plan to meet this kind of targets for the whole of FY25, sir? This is my first question, sir.
Ajmeraji, we told that we will grow in credit 11 to 13%. We are growing 12%. It means we are as per the trend. You rightly said that the growth in the first half vis-a-vis the gap which we have to fill in the next half is a issue which you are raising. But you see the last year number. Last year number is the same. When you are growing as per trend, what will happen? Last year also we grown 40,000 crore in the second half. This year also the gap is 40,000 crore in the second half. The same number we are continuing. This is how the business is happening in the country. So we are actually exactly on the track. Exactly on the track. Now your question was how much was the sanctions? How much was the in pipeline? I'm telling you, this year we have sanctioned 20% more than the last year. Last year in the first half we sanctioned 27,000 crore. This time we have 32,000 crore. So it means we have a more pipeline, right? So the pipeline, I'm telling you, the 3-4 part of this pipeline, undisbursed term loan is around close to 7,000 crore. Sanctions, which we already sanctions, 7,200. 7,000 crore where the partial disbursement has happened, and partial disbursement based on the growth or based on the completion of the project will give. Around the 16,000-17,000 crore of a proposal in pipeline. Undisbursed working capital limits are close to 28,000 crores. So considering this repayment and all the sanctions which we are having, we are confident of achieving this. Of course, the number you slightly came down because 2 reasons. One is whatever in a corporate lending, if the margins are not there, then we let it go. Rather, we continuously we are on the profitable growth path. We are not on a growth path because you see our margins and everything. Yes, so sir. We are confident that the way we are doing every time, this time also. Because when your band is 11 to 13, you are growing 12, you are on the track. You are on the track. As per the last. Likewise, in the deposit also, we said 8 to 10%, we are at 8%. So my point is the growth in credit and the growth of deposit, you see both we match. Even if you say September 23 to September 24, growth in deposit and growth in credit, you see the gap of around 6 or 7,000. We have raised the infra fund of 10,000. We have a profitability more than the 5,000 this and last time 4,000, 9,000 crore. So the liquidity point of view also we are comfortable. From the growth point of also we are comfortable.
No, sir, I mean, it is
all other engines, whether retail, agri and MSME, we are growing 14%, which is more than the guidance we have given.
Thanks for this reassurance, sir, because, like some of the banks, they have done, recently we just concluded one of the other big banks analyst meet, and there in the first half itself, they grew about 6.5%, 7%. So that is why the question came to my mind that, but anyway, if you are, as long as you are meeting the targets of the whole of the FY25, I mean, there is no issue, and that reassurance goes very well. Having said that, sir, you had covered this SMA2. I couldn't hear it properly that time. So you said that one account out of this 3,301, which has come in SMA2 above 5 crore, is around 2,000 something, and it is a government account. So can you just repeat it, sir, or explain it a little more clearly, sir?
Okay. So actually what we said that the SMA2 number, right? So just a minute. SMA2 number was, SMA1 plus 2 was, just a minute.
No, 2 was 3,301.
Just a minute, let me.
As compared to 1,075 in the last quarter.
Okay, I'm just telling you. Just a minute. SMA 1 and 2 was 2,450 crore in June, which has increased to 4,762 crore.
Yes.
Slide number 32. So incremental is 2,300 crore. What is?
Yes, sir.
Out of 2,300 crore, 2,200 crore is one account. First point.
Okay.
First point is this is one account in the corporate, and that is why you are seeing corporate. It was 365 become 2,500. So 2,200. And this is a government account guaranteed by a government, and they paid this irregularity, which was SMA2 in September, has now become SMA1. So they part of the irregularity they have cleared. Clear, sir?
Yes, sir. Yes, sir. Yes, this is yes, because the figure just shot up this thing. And sir, this our on the recovery front, again you are within the target. I mean, there's good recovery. So can you give some color on the present recoveries and going forward with the NARCL and NCLT? Are the things are speeding up? Are we going to have a better recovery than even our targeted one? Because we have also got good pool of even return of accounts also, and a lot of cases are at a positive stage.
Yeah. So last time we have recovered 8,600 crore. Right?
Yes.
At this time we say we will be having a less recovery because 7,000 to 8,000 crore more or less. So virtually internally we decided close to 2,000 crore of a recovery we will do. In the last 2 quarters we recovered close to 4,000 crore. This is one point. Yes. Yes. Now the going forward the recovery. This is the second question. So 2 things is there that we are having a 41,000 crore of a PWO book or 19,000 crore of a. So around close to 60,000 crore of a book, right? We are having close to 22,000 crore of a NCLT book. Now this going forward the recovery which we are expecting from the NCLT, surfaces, OTS and ARC, because we have a NCLT, I told you we have a huge pool. Surface also last time we recovered around 860 crore. In the last half we recovered 400 crore. So same number we are trying to achieve in this year also. Half year 400, next half year 400. Right? Likewise in the OTS last time we recovered 1,500 crore. This half year we recovered 755 crore. So we are going totally on those lines. ARC of course Last time we have recovered 465. In this year, we have recovered 97 crores. So, but you see one presentation, NARCL, where 7 account of 700 crore where bids have been received. So we'll go for the Swiss challenge, and this amount when we'll transfer to NARCL, naturally this ARC recovery will happen. So we are dot on the track. The 2000, around 2000 crore of a quarterly recovery. Of course, our guidance will continue to be around the 7,000 to 7,500 crore of a recovery. So we are moving on that direction, sir.
Point well taken, sir. Last question in this round on treasury, sir. Our performance of treasury is reasonable in this quarter also. I mean, we have made some good, decent profit also, trading profit also, as well as the valuation profit and gains also. So going forward, sir, what is your take on when I think we expect some rate cut also in December? Will be having the better profitability on the overall treasury operations, including the equity, debt, trading also, as well as on the because of the rate cut, on the valuation front also. So overall, in the next 6 months, I mean, this current 6 months will be better than the last 6 months on the treasury.
Okay, 3 things. I'll complete the entire investment book.
Yeah.
First of all, we have added the investment by 5,000 crore in June to September, right?
Yes, sir.
So because we are having a liquidity and all, first point. And we have 3,000 we have added in SLR and 2,000 non-SLR, right? Now, second point is that the yield on investment, which is very, very important. Our yield on investment in June was 7.15. In September, it is 7.17. So our yield on investment is 7.17, and the 10-year GSEC is 6.8687. So we are much above the 10-year GSEC, second point. Now, as per the guidelines, the unrealized profit on AFS will go to the reserve, AFS reserve, and FVTPL comes in the P&L account.
Yes, sir.
700 odd crores, which is unrealized profit because of this, is moved to the AFS reserve. We could have even 700 crore more, we could have won. But we thought that let us have a good margin, we have a good margin and continuously profitability. So this is our treasury. Otherwise, the profit would have been 200 plus 700.
Yes.
It would have come down in the time to come, right? This is the second point. So third point is that what we are doing as treasury, we know that interest rate had come down. That is why we have built the book at 7.17. Today also, when the yield is between around 6.9, we are buying. If it is going below 6.8, we are selling. This is how we are moving. So we think that it should be around 6.75 to 6.85, or this should be the trend. But we are sitting in a very comfortable position, sir.
Thank you, sir. We'll take the next question from Mona. Mona, please unmute yourself.
Yeah, hi, sir. Good evening. Congratulations on a good set of numbers. Just 2 questions. Yeah. So firstly, in your notes to accounts, you've mentioned that about 300 crores of provisions were made outside of the minimum regulatory requirements. So this is part of PCR itself, right? Or it's outside of PCR?
No, whatever provision we make, if it is a standard asset provision, it cannot be a part of the PCR because NPA provision only comes in the.
Okay, so this is standard provisions.
This is standard.
Okay, got it. And secondly, so if I have to look at the balance sheet level, what sort of outstanding standard provisions we have on the books?
In the entire book, we are having standard asset provision close to 8,500 crore.
Okay. And how much of this is towards restructured book?
Generally, we are having restructured book close to around 30%. 28%.
28%
28%
PCR on?
We are having provision. It's
Got
against
it,
the regulatory requirement of 10%, we are having 28%.
Mm-hmm. Got it. That's all from my side. Thank you.
Yeah, thank you, Mona. Next question we'll take from Dikshit. Dikshit, please unmute yourself.
One question. Firstly, one clarification. You mentioned that this one corporate, government corporate account, which is in SMA-2, so we have received some amount after the September, you are saying, and therefore it has moved to SMA-1 now.
Part of the irregularity, suppose the irregular amount, say 100 crore and we recovered 50 crore, so the irregularity which was 60 days has become less than 60 days, 30 days.
Okay, and are we holding any provision against this account?
We are having provision based on the portfolios and all.
Okay. And my last question is in the non-interest income, under the miscellaneous income has gone up to 228 crore from 99 crore year on year or 135 crore quarter on quarter. So was there any one-off in this 228 crore? Any significant one item?
Basically, this is the penal interest. Major part of it is a penal. Penal charges.
Okay, therefore it has gone up substantially YOY.
That is why the NII growth is looking less and the fee-based income.
Okay, understood. Thank you. That's it from my side. Thanks.
Yeah, thank you, Dikshit. Any other participant, if you have a question, please use the raise hand option and ask your question. So before that, there is one other question which is there in the chat box. What is the LCR for the second quarter and any impact that you saw primarily because of the RBI supervision, which asked few of the banks basically to rework their LCR?
What is the question? What is the?
Sir, what is the LCR for second quarter? Liquidity
LCR is close to around 120% plus. Last quarter we were having a LCR of 114%. June, now around of 120 plus 120, 121, 122. This is the range we are in.
There were these banks basically who had said that there was this RBI supervision and because of it there was some impact on the LCR. So how come basically our LCR has actually gone up? Is it that we have raised some funds recently?
No, what happens, the RBI is based on the guidelines. We also fine tune our guidelines. So after considering everything, it is 122%.
Okay, sure, sir. Sir, and secondly there was this Telangana farm loan waiver. Any impact of that basically has reflected into our numbers? Similarly, if you look at a lot of banks have reported higher NPS in the retail segment. Obviously, we do not have as much of exposure to unsecured loans. But any stress that we are seeing in any other segment?
No, we are having even the less than 200 crore exposure. We are not having much exposure in Telangana. And they are paying us money, Baba. So we are having close to 200 crore of 206 crore.
So in the retail book, in the retail book, are you seeing some stress?
No, you see our retail book, SMA and all these, no? The slippage is 120 crore and the collection efficiency is 95-96%. So there is no issue, sir. And 110,000 crore book and small amount.
Sure, sir. So any other participant, if you have a question, please use the raise hand option and ask a question. Suraj, yeah, please unmute yourself and ask a question.
Yeah, hi sir. Thanks for the opportunity. Sir, one question on your housing finance book. So if I see the slide 12, so the housing finance rating mix has changed drastically because I think some account from the AAA has been, either prepaid or something like that. And corresponding, the housing finance book has also come down to 13,000 to 8,000 crores. So if you can give some color here.
Yeah. One of the big account which because of the rate and all issues, they repaid back.
Okay, sure. Is it sir ICICI Home Finance?
Account specific will not work.
Sure, sir. Okay. Thank you.
Thank you, Suraj. Next question we'll take from Jai Mundra. Jai, please unmute yourself.
Yeah, hi sir, good evening. Sir, a couple of questions. First, sir, Sir, we have this interbank housing, right? Which is 51%, where we own 51%. If you look at the draft RBI circular on the investments, etc., how do you see the fate of that entity? Would you be okay to merge with the bank, or how should one look at it?
No, this interbank housing we are closing, na?
Okay. So this anyway was going to get down, irrespective of RBI circular.
No, we are closing it because there is no activity in the company, except they are having some assets. They are having some assets, so we are in the process of selling those assets.
Okay. So, okay, understood. But we only have 51% stake, right? I mean,
Now
the
we
other
are having
49%,
51, and then the HUDCO is there with us, and 25% HUDCO, and rest is the public. But last so many days, last so many years, there is no activity except the asset which.
Yeah. Yes. So that is a defunct kind of an entity. I was just thinking if.
No, we are in the process of selling the asset which they are having.
Right. Okay. And sir, secondly, if you can share your loan book mix by benchmark, how much is EBLR, MCLR, fixed rate book, and foreign currency, etc.?
Yeah. So my as on 30th September, MCLR book is 58%, and the repo link is 36%, and the fixed is 5%, and others is 1%.
Okay. Sure. And so this MCLR.
In a MCLR also, 1 year MCLR is 80%.
Oh, okay. Sure. And sir, repo will anyway be within immediate or maybe 1 week repricing kind of a thing, right? Fair to assume that?
Repo will be the next day.
Right. Okay. And sir, this on PSL, right? So I think the other income spike you have already answered. On the PSL gains that we have seen, I believe we have a policy of amortizing PSL gains throughout the year, so that the amount is more or less consistent. But what I wanted to check was where is the commission that we get? If I look at annual report, we tend to sell most of the category in SMF, right? Small and marginal farmer. The small sell is there in the PSLC Agri. But if you can highlight what kind of the yields that you get or that you have got in the Q1 and Q2.
Three things basically. In PSLC side, our income, which used to be 400 odd crore in 22, 657 crore in 24, now 700 odd crores, and around 300 and how much? 364, 182 crore last year, and 182 into 2, 364 crore we are carrying it forward, which will be the income for the Q3 and Q4. So this earlier we used to have in 1 quarter, but from last year we changed this policy. So this is going on, and we are selling the PSLC in small and marginal farmer in other categories as well. But better return is in this category.
Right.
95% of our origin small and marginal farmer.
Right. And what kind of the yield could be there, sir, for this first half or maybe last quarter?
Around
on the PSL?
2%, somewhere 2.1, 2.15. This is on the market. It is a market basically. Around 2, you can say.
Okay, so the market rate for PSL has been holding up, right? I mean, earlier it has gone down to as low as maybe 0.5% also. But as of now, it is reasonably.
What happened with the paces of time, the rate will come down. So we sold out in the first quarter itself.
Right. Okay. Understood. Sure. And sir, lastly on credit cost, right? So while the math is okay that you have reduced your net NPA by 12 basis points, and we have reported a credit cost of 65 basis point annualized, right? So far the math is good, but right now you have a net NPA which is very, very low, right? So going ahead, the credit cost could be like 20-30 basis point also. what is your assessment, sir? Assuming you have said that there is no asset quality stress is any part of the portfolio, and the SMA2 number that we saw is also government entity. So the incremental credit cost, assuming you make your net NPA stable, could be as low as 20, 30, 35 basis points. Would that be a fair assessment?
The credit cost is coming down because of the net NPA itself is coming down, right? So naturally the credit cost will further come down. How much it will come down will depends on the further slippage in a small account, even can in agri or other account. But definitely the credit cost will come down considerably.
Right. And last question, sir, if you have the number for SMA 1 plus 2 at the bank level, right? Because even in this quarter, a lot of slippages would have come from below 5 crores account. So if you have that number, it will be very, very helpful, sir.
Okay, that will provide you.
Sure. Thank you, sir.
Thank
Great
you.
and all the very best.
Thank you, sir. Thank you.
Thank you, Jay. Next question will take from Mona. Mona, please unmute yourself.
Yeah, hi sir. Just a follow-up question. So if I look at the liability accretion in H1 between deposits and borrowings, you've relied, or the bank has relied a lot more on borrowings versus deposits. So if you could just highlight what is going on here. Is it a challenge in deposits, or is it because you're getting borrowings at a much competitive rate? If you could just throw some light here. Thank you.
You see what is my 400 days deposit rate is 7.30 today. If you see the bulk deposit interest rate is anywhere between 7.7 to 7.9%. These are the two rates. What rate we raise the infra bond at an average price of 7.18. Plus there is no CRR, SLR obligation, no DICG's fees obligation. So if you reduce the cost of around 40 bps because of negative carry on, it comes to around 6.8%. So which makes a huge sense to us, and therefore we are going for infra bond, because ultimately the margins are important, and we have a huge infra book of close to 55,000 crore. Even so, there's opportunity for us, so we are going for that.
Got it, sir. Thank you. That's helpful.
Thank you, Mona. Next question we'll take from Rakesh. Rakesh, please unmute.
Thanks for the opportunity, and quite a stable performance, especially on the asset quality side, quite good performance this quarter again. So just one question with respect to the loan write-off. So are we looking at close to another 3,000 crore of loan write-off in the second half, considering the run rate and plus what we had in the loss asset as on March 24.
You see your loan write-off rate itself is coming down. So correct, going forward, it will lesser write-off is against the current write-off, because some of the outstanding which we are getting a tax benefits as well. So considering all aspects in view, we go for write-off, technical write-off. But some write-off will always happen because of the compromise and because of our balance sheet management.
Correct. And sir, PCR we are expecting to maintain at this level, or just considering that the accumulated provision number is also coming down. So just from that perspective, I am asking the PCR number we would maintain it around this level only, sir. Correct, sir?
PCR we are 97.6, so close to 98% of the PCR we are having.
Sure. Thank you so much, sir. Thank you, sir. All the best, sir.
Sir, one question which has come in the chat box is that another public sector bank had a higher AS15 provision during the current quarter. Is there a possibility that we might also do something similar, maybe in next second half?
No, we have already increased our AS15 provision from 547 crore of the September 23 to 812 crore. We already increased AS 15 provision, and the reason for increasing AS 15 provision is that we brought the discount rate to 6.94% is against 7.16% of the June and all. So we are exactly what the current market is.
Excellent. Yeah. Sir, I think we do not have any further questions. Maybe we can close the call, sir, if you have any closing comments to make.
Thank you very much for all analysts and investors for sparing your valuable time and giving us an insight and giving us a motivation to do better. So kindly keep supporting us. Thank you very much and happy Diwali to you all.
Yeah, thank you all participants. Yeah, and happy Diwali from all.